right, we are live for the Stock Tank episode. Finally, Air Test Systems. So, how are you guys doing?
Doing awesome, brother. I'm super excited about this one. Air Test Systems has been one of the I would say hidden gems, especially ones that you have found recently, and you've been killing it on a couple different names. So,
Thanks.
but it's a hard name for me to understand. So I'm excited for someone with a PhD to break it down for me.
Yeah, and that's actually a good note on this. I'm not a domain expert here. This is not what my PhD is in. So, like we always say this, but make sure you do your own research. This isn't financial advice. And this should really be like if you're kind of new to air, you've never heard of it before, you've not heard of automated testing equipment. This could be a good platform for you just to start on as far as this conversation, and then jump in and do your own research, check things out, make sure you're comfortable investing in it. So, just a couple of overview things on Air Test Systems. It is up close to 70% all year to date. I got in last July and did the invest and investigate type of thing. I liked what I saw early on. I learned a whole lot, but this space was new to me, so I went kind of slow as far as trying to figure out, okay, what am I actually comfortable weighting this? And one of the challenges was this is a microcap, so it is over $1 billion market cap, barely 1.14 billion today. But it also it's a little bit unique because you also oftentimes think of a company this size, especially as they're going to be ramping revenue a lot here in the next couple of years as a startup. But it's been around as long as I have, 45 years. So. What I think that we're going to do here is they did a presentation at Needham back in January, which is kind of like a investor day type of event. And so there's going to be some slides that I'll just pull from that. We'll look at the financials, which you're like, hey, why are you investing in this? They have no revenue. It's not much revenue. It's very small. We're talking about millions of dollars, not billions of dollars. I mean, if they had billions of dollars, they wouldn't be a 1.1 billion market cap. So all right, so first, let me pull up the IR slide thing from Fiscal. Oh, yeah, there we go. Okay, perfect. All right, so this is Air Test Systems, what they have done as far as their recent slide at Needham. And I need page 6 here. So they have a worldwide customer base, but it kind of comes with an asterisk. That these are all companies that have some of their systems. The way the automated testing equipment market works essentially is you build these massive testing machines and then you ship them to your customer or wherever their production line is. Oftentimes, it's going over to Taiwan, but not always the case. And so once they have that unit, there is recurring revenue that we'll talk about later and everything, but they're very well known, well respected. They're on the West Coast, which is honestly the right place to be. And automated testing equipment, let me show you page 16 here, just so you have an idea of what this looks like. This is essentially what you're trying to do is eliminate failure early in the process. And so there's a couple of big ATE, let's see, is that kind of visible? There's two big guys in the space. What's that?
I think you might need to zoom out a bit. We jumped straight into automated testing. No, not like in the slide. I mean, like in your explanation.
Okay.
Like what space, where in the flow does automated testing equipment play? Why is this relevant? And then
okay, let me go up here.
Because I know a little bit about air, and I was like, oh, holy, we're like right into it. Okay.
Yeah. So this is, it looks different depending on what's being tested. Automated testing equipment isn't just AI processors. It works traditionally just silicon carbide now, gallium nitride, silicon photonics, flash, NAND memory, DRAM, hard drives, inverters, you name it. And there's two big guys that are in this space, Advantest and Teradyne. TER is the latter symbol. Advantest is overseas. But oftentimes they operate either at the very beginning or the very end of this production line. So basically, you're going through, this is not all you're doing, but these are the tests that are oftentimes in the process. And you're trying to make sure that things are working, that when you produce it, that it ultimately ships to the customer and it works as expected. And so a lot of what Teradyne and Advantest do sit right back here or up here. So back here, system level test, that's what it stands for, is the whole thing, whatever it is, let's say it's a laptop, is done, it's ready to go. They put it in the systems level test, it tests the entire system. it's not super thorough, but it's like, okay, did it turn on? Did it perform initially as expected? Great, good enough. Go ahead and ship it out. Have to have that. That's not really going away. Wafer test. So wafer is the individual sheets, the die core basically that are created, and they don't come out pre-stamped or anything like that. They come out on these massive sheets. Some hold up to 1,000 die cores. And so initially what happens currently with AI processors, it's a little bit different depending on the product, is they're tested right up here just with some probes, just do a quick test, make sure all the connections are there, and great. So like, is it initially working? That's what the Teradynes and the Advantis look at, from wafer test all the way to systems level test. Packaging is what happens. Basically, they stamp out the die cores and they put them together in whatever units. So, like a lot of these NVIDIA and AMD chipsets have 8 die cores on them. Lots of NAND, lots of DRAM as well are in these. And so it's a not completed unit, but it's a system of chips basically that you have that put together more than just the individual wafers that haven't been stamped up, but you punch them out, you put them with some other things, and you're testing it at the package level as well. Where AEHR fits in here basically is they specialize in 2 different things. There's several different names of the equipment they have that just different voltage ranges and what you're actually ultimately trying to test. But they have 2 things that they really are focusing on and driving. The Sonoma test system, which is a package burn-in level. And essentially what this is rather than just, let's make sure that everything is working right now, they're actually trying to look and eliminate those that are going to fail early. We're going to go back to that bathtub curve that they talk about here. And then this is the AEHR Fox XP. It's the most expensive of their units. Very good margins on it as well. This is for the wafer level burn-in. So it's not just a test that's happening here. Burn-in is basically you're pushing through huge amounts of voltage through a whole lot of layers, depending on the unit of whatever substrate that you're testing. So silicon carbide, gallium nitride, silicon photonics. And so what they're able to do because of the burn-in, like moving things a little bit further upstream, they love everybody to be up here because it's higher margins. And you'll actually, think about it this way. If you have a sheet with 1,000 die cores and you put it in this Fox XP system, you're going to be able to test actually 18 sheets. So let's say up to 18,000 die core at once. What that's going to enable them to do is test all those at the same time for up to 24 hours in that burn-in process. And so they're trying to make these things fail if they're going to fail. And same with the package parts burn-in as well. So they're able to take customers, whether they want to move all the way upstream, which some have, like On Semi has, and there's a lot of others that are looking like they're moving that direction. They're ordering some units and they're ramping up, and others, they're doing the package burn-in. This right here is their deepest moat. They're basically, a couple of exceptions, but basically the only ones that do the wafer burn-in test. And it's technically a very hard problem to do and solve, especially on some of the substrates like gallium nitride. There's other package burn-in level, but a lot of times the systems, again, are just focused on just making sure it's working now, not if it'll actually keep working in the future. So let me go back to the bathtub curve, and then there's a lot more, but also just kind of stop so if you guys have questions. So this is essentially what they're trying to do. They call it infant mortality. And so it's the idea basically that early in this process, if you are stress testing these through the burn-in process, whether it's hours or days or even months, which that doesn't really happen with the AI processors, but it can happen with some applications when cost of failure is really high. And so they test it up to whatever the customer specifications are, and like, hey, there you go. So they ship out these units, customers are testing it themselves. They're catching a lot of these early on. And so rather than having this entire package parts where they've put together 8 different die core and a bunch of DRAM, they say, well, this doesn't work. They throw it out. Essentially, I mean, it is recycled, but they lose a lot of money then. Instead, they're able to test for longer, have a much lower failure rate ultimately down the line. And if there is, some of those dies in the wafer that are not good, when they punch those out, they just remove them completely. And so this increases throughput at a much lower price and also helps as far as reliability. And essentially let me pause there and we'll talk about like what's changed for AEHR, why I'm actually really excited and interested in them, like what's happened different in the space. and some of the ramifications. So any questions here right now? And we'll keep going. You're muted.
I was just saying I don't have any questions so far. I just wanted to potentially know what the catalysts are, because I'm peeking around on.
Tanner, you're getting ahead. Like
that's next.
We're 10 minutes into a show. Okay, Tanner.
I know, but like
all this stuff. This is that you're like talking Mandarin to me right now. So when you're in the process of making chips, this is basically like the quality assurance phase before you ship the final product. And in the quality assurance phase, this is how I'm framing it. Let me know if I'm wrong or right. There's a series of different tests on the unit level, all the way to the entire like end-to-end system before you can get the green light and then ship the hardware to the end customer. With me so far?
Yeah.
Okay. Why do the specifications come from the customer as opposed to AEHR? I guess it's like different formats for all the chips.
So they whoever's producing this. So like, let's say it's an NVIDIA or on Semi or Navitas or whatever, they've designed chips. They're like, hey, they're going to be used for this. We need to have a failure rate under this amount. And so they'll go to AEHR or another ATE provider, and they'll say, this is a specification of the chip. Here's some samples. What we want to do is not a production run. I lost the word. It's not validation. It's something close to that, but it starts with a P. But basically, they go to them. It's a paid thing that and they're like, hey, we are interested in your products. We would like to look at using your equipment. We need to make sure that it's a good fit for us and it meets our needs. And so AEHR will test that in-house initially. And if everything goes well, on this, by the way, one thing to note is these are long sales lines. So you're not going to have a customer come out and be like, hey, I'm going to order 20 units. I like them out next week. It's like, we're going to talk about volumes here in a minute, but it's a long sales cycle. So you're looking at usually about 6 to 9 months. On the shorter end, it could be up towards a year, which is why we have actually a lot of visibility on what's coming down the line for AEHR as far as. But the big catalyst, the big shift. Let me look at and show you the previous catalyst, and then we're going to talk about this one and really why this time really is different. So here is
before we go on to that one. So I get the concept of like a customer doing like a validation dry run essentially with AEHR to say, okay, you have a lower failure rate than what our specification is. We're going to work with you. How does it work where the runs that fail, is AEHR on the hook for those, or is that sort of baked into the contract? Like, hey, a certain amount are going to fail. But I'm curious, like, if you have more failures than normal, is that sort of just baked into the cake and the customer won't work with them again after that run? Or is it like, hey, you're on the hook for every product you break kind of thing?
Yeah, so all AEHR is doing is basically selling the units and the parts that go along with the units. There is service revenue, there's some recurring revenue, but let's say the customer comes to them, they're like, hey, we want to go ahead and test and validate and make sure that we're good to go. Here's a little bit of money for that. They end up saying, hey, this makes sense. Let's ink a deal. Usually right then AEHR will, if it's a larger deal, they'll actually give a press release, unless it's close to earnings, which we are right now. There's usually a 3 to 4 month window, week window that it's just a quiet period, and they'll wait and they'll release it at the same time as earnings, which we're in right now. Our earnings is in like a week and a half.
So this is not a service that AEHR is running for these customers. They're literally selling them a piece of hardware, like a printer, let's say, that then goes into their facility and it's like, hey, you can now use the AEHR, machine.
Yeah, let me show you what they actually look like again. That might be helpful, and then like the machine, the layout, and everything. This is what they're shipping and selling. So the customer says, "Hey, things look good. Let's order a couple of these units." Usually for a production run of chips, they're going to order like around 20 to 25 machines. If they're actually serious on volume, this is a Fox XP and what it looks like. A little bit lower voltage, Fox CP, Sonoma, the packaged parts. Tahoe is also packaged parts. Not as good as Sonoma. I mean, it's still a nice unit. It's lower voltage. You can see that the voltage there. This was actually from an acquisition that they did with Incal. And then that's not okay. So here's their production floor, what this actually looks like. But as far as how this gets installed, okay, yeah, real quick. Here is the Fox XP. So these are the blades or the wafer pack specifically that they put the wafer on and insert it. You can do that manually and save a little bit of money. You can also be upsold and actually have an auto loader that takes care of this. A lot of the larger customers will end up just buying the machine initially and say, you know what, let's automate this process as well. So they're able to test a lot of wafers at the same time, and they're very unique in that. And then here we go. This is a way that typically these would be laid out. Floor plan is that they would insert and say, okay, we have all these wafer packs, not wafer packs, but Fox XP systems that are testing these wafers. Let's line up 20 of them here on the floor for that single type of chip. And chipsets, I'm talking about GPUs, TPUs, ASICs, the whole gamut. So does that make sense?
Yep. Yeah.
Okay. Let's exit this. We can go back to a couple of these slides, but I want to show you a couple of things. So this is revenue. This is annual revenue. This is in millions of dollars. So it's not a lot. You can see a jump though from May 2021 to May 2022. But this, if you look at the share price and overlay it, AEHR is actually not at the all-time high. And the reason why, what happened here is this was the EV arms race. And AEHR is like, hey, great, silicon carbide is used incredibly well across that space. Let's put ourselves forward as basically the go-to for the testing of this. And so it was off to the races. And as far as bookings, expected bookings, volume, it was happening in space. I mean, you guys remember investing in EVs back in 2021 and 2022. Everybody's like, man, this is amazing. And I mean, like even Apple was designing an EV. And then it dropped off a cliff. And there's a lot of reasons for that. But like looking at the space, the CEO, Gain Erickson, has been with the company for a long time. He took a lot of heat back then. Oops, the wrong one. Simply because he was like, hey, we're expecting to do this amount. And since the whole EV arms race ended up drying up, that didn't materialize as much as they would have expected. Now, at this time, they were doing about 90% of their revenue on silicon carbide, specifically that testing that substrate, which was mostly for EV type of applications. It's not all cars or anything like that. But yeah, the stock price went up higher. I think we'll see a new all-time high this year. It fell down. There was a lawsuit that was actually issued. Like you'll see anytime a stock drops very far, the shareholders will be like, let me sue. Didn't go anywhere, of course, like none of these do. And like everybody that was in the space was surprised how quickly things changed and dried up. The catalyst here, Tanner, is to go back to your early question.
Yeah.
What's happening in AI? If it wasn't for what's happening with AI, I'd be like, it's probably a good company, but you know, there's better plays. But AI we're seeing several things. So first, the cost of what's actually being produced, the volume that is being produced, the throughput that's needed there, which testing at the wafer level helps you both for the cost of failure ramifications and also the actual cost of testing. The ramifications of cost of failure, like when you're actually, my understanding is if you're training a large language model, not doing inference, but actually training, and you have a failure during that time, it could disrupt that entire process and you have to start over. It's not always the case, but the cost of failure is very high for that. Very high when you're driving your Tesla and something malfunctions. If we're talking about in the future, this is ways out. This is not why I'm invested in AEHR, but data centers in space, which there's a lot of inverters and a lot of things going on that need to be tested. If something fails, it's not like you can just be like, hey, I'll drop by there on the way back from work and get it fixed. You got to send somebody to space or a robot. Robots as well. Like there's so many things that are driving the need for testing, the cost, the throughput that's needed. And the last piece here that's really ramping things up is to get people to shift away from business as usual and the way that they've been testing and comfortable with. There really has to be a couple of things, or two things really help. One, like we said, is there has to be something that shifts in the entire market or space where people are like, hey, this is no longer satisfactory. That's happened. That continues to happen with AI. None of this are like saying this is a bubble. The other that really is helpful is you get startups or people that are new in the space that have not been doing this before, that are suddenly creating their own products. So, that's Google's TPUs, that's Amazon, help me out, it starts with a T, whatever they're producing over. What is it called?
Tranium.
Trinium, thank you. Yes. All these hyperscalers are like, hey, let's create our own product. There's a lot more that are in this arms rush. And as a result, they are not just saying, what we've done in the past is fine. Instead, they're looking, they're like, why are more people not over here upstream? And so they've, in essence, what Gain had said is there's a lot of volumes that are coming. Now, there's some challenges to that. I want to explain a little bit more on air too, but I'll talk about what really particularly excited me the first quarter of this year is actually they have an offset fiscal year and what has happened since that time as well, and where I think that this is going. So let me pull back up the Needham slide. And
I'm not sure how we're going to do it with bookmarking questions because Roy's also presenting.
Yeah, it's you can yell out to me and be like, "Hey, this is a good question," and all.
Yeah, Tevis, you just write them down on pen and paper.
Yeah, if you put the timestamp and the name,
I was just copying
on
our notepad, and I can just hit you guys with them at the end.
Yeah, that'll work really good.
Don't worry, Tanner. You don't lift a little finger, okay? I'll do all the work. Me and Roy.
Yep. I got my fidget spinner. I'm just looking. I'm just listening.
Okay, so going back to the Teradyne and Advantis, these are the big guys. They're doing different types of testing. Air Test Systems is one of several niche players that have specialized equipment that are doing things a little bit differently. These guys basically are all over wafer. They also do very well with package part burn-in, but there's a lot of other little guys out there as well. One of the things that differentiates them, or I guess two of the things, first, they're on the West Coast, which again is where all the decisions, or most of the decisions, are being made as far as what you use for testing equipment. So they frequently have customers that actually drop by their Fremont campus and just take the tour and look at what they're doing, talk to Gain in person. That's been helpful. And the other thing that's helpful too is actually being able to produce volume quantity. So the acquisition that they did last year was called InCal, and that Sonoma, which is a package part burn-in, is what they acquired them for. And the reason they acquired them for a couple of reasons, but the biggest one is they looked at what they were doing with their Tahoe systems and they're like, it's okay, but the higher voltage, that's really the way that this market is going, especially what's happening with the AI arms rush. And they were looking at these guys as an acquisition at the same time as a hyperscaler came out and said, hey, InCal, we love your product. We'd like to use you. How many can you build a month? And they're like, yeah, 1 to 2. Okay. And how fast can you ramp that? Because again, if you're doing a production line of chips, you need 20 to 25. Like, yeah, we can probably ramp to 2, maybe 2.5 over the next 6 months. And they're like, dude. And so they're already a customer of Air Test Systems. They're lamenting. They're like, we wish your Tahoe unit was better. We love this, what these guys are doing. And they're like, we're thinking about making the acquisition. Like, okay, great. If you do, let us know. And that ended up happening.
That is finalized?
Oh, yeah. That was finalized last year. They've moved everything over to one warehouse, and they can deliver 20 of these units, whether wafer level or package part burn-in or a combination thereof, which is much higher than the volume that they can actually provide right now. But a lot of the other niche players that are out there, they're like the InCals, where they might have some nice products, but they can deliver like 1 or 2 systems per month, which is just, it's not what the hyperscalers need. They need something a lot more. So that's a couple of the advantages. And I want to show you, before we go back to the revenue slide here, this is important too to know. So they're in the middle of what I think is going to happen is a lot of revenue comes in over the next 3 to 4 years. And then we'll have to see, like we're not far enough in this AI rush to really be able to perceive what's going to happen on the other side. I know people like look at NVIDIA and Micron. They're like, hey, these are going to drop off a cliff. We don't know. But for Air, they have reoccurring revenue. So they have the wafer packs and the die packs. Die packs are for the package part burn-in. Wafer packs are for Fox XP. These tend to be pretty high margin, especially the wafer packs themselves. And the reason why this is recurring is not so much that they wear out, but anytime you change anything with a chip. So you have your production run of whatever chipsets that you're doing, the SoCs. When that's finalized or you're making changes or whatever, you need a new wafer pack. You need a new die pack. And so they come back again, they order more of these. There's also some servicing revenue as well. So let me remove this here and we'll get more into the numbers. All right. So These are very low revenue numbers. Specifically, I want to show you on the KPIs kind of what this looks like, and let's do it on a quarterly basis. All right. So systems revenue, you can see right here. These are the actual whole systems that they sold. That's paltry. That's frankly terrible. And you can see back in 2023, silicon carbide, the systems that they were selling for Fox XP were doing much better. Those are still out there. They're still being used. Tesla is one of several that are in the space that are using their product. Contactors revenue, this is the wafer and die packs as well. And so you can see, especially when there's larger, newer production runs that are on these machines, but that there's larger recurring revenue, but there's always going to be some. This is a tiny amount of revenue. But what was really interesting was what Gain had said as far as bookings. So bookings, you can look at, oh no, not backlog. Bookings we're just going to do, and they have what's called effective backlog too, but it's not on here. So this is really small. This is essentially what customers had signed at the time. Now, effective backlog, which is basically not at the end of the quarter, but at the time of the actual earnings call, was actually closer to the 11 million. What Gain said was particularly interesting. He said, okay, so this is over the last half a year, we're looking at about $18 million in bookings. That's nothing. You can see it was significantly higher previously, which was happening during the EV rush. And he said, hey, while we don't guide on this, I do want to comment on this because a large hyperscaler, the same guys actually that basically said, hey, you should totally acquire InCal. And if you do, we're going to buy a lot of units from you because you can actually produce them. That happened. Is the same customer that came up to Gain and is like, hey, Gain, we are going to be doing a large production run of one of our chips, and we want to use your system specifically. They had some customer. Well, this customer was for package part burn-in, and also. So anyway, the Gain was like, based on this comment, based on the volume size of order that they're talking about, this number of, over the last half of the year of $18 million, which is nothing. He's like, hey, $60 to $80 million is what we're looking at by the end of our fourth quarter, which ends in May. So the first half of the year was going from like this to 10 times its size. Why? In part because of those guys. And they actually came through. This is February 11th. AIR secures key AI production burn-in win with initial order of Sonoma systems for lead hyperscaler customers, next generation AI ASIC processors. Probably Google. We don't know for sure, but there's a lot of pieces that kind of make sense. There was a guy that did a really good deep dive on X, and he talked about this as well. So yeah, he's reiterated this a number of times. We may not see that full 60 to 80 million in this earnings, but they had a whole bunch of announcements for them related to this. So here's that very large order I'm expecting, and there's going to be follow-on orders as well that come beyond this. They've also received an order for $14 million for Fox XP. Those are the higher margins right there. And then we can see a follow-on order here as well for, this is over on the silicon photonics side, which are also all over too. So probably I would guess there's another one or two that they'll come out with during the time of earnings. So yeah, it's not a large amount of money, but basically it's a 10x in revenue. And so the last little note that I'll have, and then we'll get into some questions as well, is as far as the TAM on the AI side. Again, it's the AI story that's really driving this. And so he went in and he talked about the number of wafer starts. This was 7.5 or 8 months ago. There were 4 million wafer starts that were at that point. And so just estimating the size of the market and what AIR is able to get there, it's like, this looks like maybe 300 to 350 of their systems, which doesn't sound like a lot. They sell for $4 to $5 million before add-ons, the autoloader and also the wafer pack or die core as well. Fox XP, which tests on the wafer side, are a little bit higher price there. And so if you just look at what he said, he's in the earnings call itself, like he's talking about, and he's saying, these guys are coming out and they're asking me, okay, how many can you actually produce in an entire year? Can you give us 50 if we want 50? I mean, if you look at their revenue, they may not get 50 units all at once as far as an order, but like the revenue is going to go from like paltry and nothing to the second half of this year. It'll be the highest revenue that they've ever had in any half of a year. And I think that this is just the beginning. So anyway, 350 of their units Fox XP, 4 to 5 million a pop. They can probably produce easily 100 units in a year. That's well above where they're at. That's not going to happen all at once. But it's not just one hyperscaler that's interested in this. He talks about other hyperscalers that are a little bit earlier in the sell cycle, where they're just making sure that their units will work well with air. There's some that are a little bit closer as well. And there's a lot of opportunity, not just what's happening with AI specifically. They're still very bullish on silicon carbide and the EV space, gallium nitride, and what's happening there as well with the data centers and with power, and also with memory, and to a lesser extent, hard drives too. So anyway, I'm sure I left a lot of stuff out, but what questions, what comments, what thoughts do you have? And we can go through.
Do you want to go first, Tevis, or you want me to?
I have a whole bunch of audience questions, and then I have a couple of questions of my own, but maybe you can go first.
My biggest concern, just from looking at some of these numbers, and I am looking forward on guidance on revenue, and it looks awesome. Like they are expected to scale revenue according to analysts. But
there's only 4 analysts that cover it, though. So note
okay,
that.
Fair. But then what comes into question is if they can deliver. Now, there is only 4 analysts covering it, but they have missed 3 of the last 5 quarters on revenue. And while the TAM is growing extremely fast, can they even deliver? Like, is there going to be an execution risk here of Air Test Systems being the team that can, even fill the gap? Or if you're like trying to play the test equipment game, is it just best to buy Teradyne?
Teradyne's not a bad buy here at all. I was actually looking at them last August, and I'm like, hey, it looks really good, but I think Air is just where they're positioned is even better, because they do need to move further upstream. But that was one of the things when I was initially investigating Air. I'm like, okay, are they actually able to deliver? That's the question. So for any investor, like one thing that I'll say is go back and look what Gain Erickson was saying as far as silicon carbide in the market in 2022 specifically, and what failed to materialize. And if you come to my same conclusion where you're like, hey, everybody kind of missed how quickly that market changed, and it's not the same as what's happening with AI at all, that's where I came up with, I'm very comfortable. Other people are like, nah, this guy's just a stock pumper. And that's what he's doing, which, I mean, it doesn't, especially with these subsequent orders that we've seen in this quarter. Now, as far as your question, are they able to deliver? What they've able to do because of the acquisition with Incal, their actual production that they're able to come up with and do is substantially higher than what it was previously. And so again, they're able to produce 20 of these units per month. Now, let's say that they fall short of that, or maybe it's just 10. If something goes wrong for whatever reason, things do. 10 units per month over 3 months for a quarter. And we're looking at, let's say, the Fox XP that you get the lower end for whatever reason, because somebody's buying a lot of them, that it's $4 million, that they do no add-ons at all, absolutely nothing. That's 4 times $30 million. That's $120 million in a quarter, which is more than their annual revenue right now. And that's using pretty minor baseline assumptions. So, as long as there is demand, and there is substantial demand and interest as well, I don't think they'll have any problem. I don't know if they'll be able to do 20 units a month like Gain says, but based on looking at a lot of earnings calls, a lot of presentations, and because they've been here for 45 years, there's a lot. They've not been public that long, but they've been public a long time. He doesn't tend to overpromise as far as what they can actually deliver on. Where he overpromised was the demand that was happening with the EV space. But I mean, like, he's not the only guy that's saying, hey, AI is insane, and what's coming down the pipeline is absolutely insane as far as the production needs right now. So
the other thing I wanted to highlight is the margins on this company.
Good question.
What's going on, brother? These are disgusting.
So yes, unit volume.
What are
their gross profit in August of 2024, and pretty much every point before that was rough. Here, I can just pull my screen up. Was roughly about 50%.
Okay, that's
and then we went from 54% down to 24% on gross margins, and similar trends on operating margin, free cash flow, and net profit margin are all kind of going down and to the right.
Just cost of goods
Yeah.
sold increased or what?
It's there's a couple of things going on. One part of that is during the time of the acquisition and then moving everything from one warehouse to another. It takes employees; they're not producing things. There's extra costs associated with that. But the main is they need volume. In manufacturing, there's something called Wright's Law, which is every doubling of production tends to, depending on the product, depends on a lot of things, remove about 20% of the production price. So it really helps your margins. As far as margins, the CEO talked about that actually recently, and he said that their lowest margins that they have on any units that they sell, which are, of course, gross margins, 30% for the packaged parts, consumables, the die pack. Systems level, so we're talking about the Sonoma, the Tahoe, the Fox CP, those are 60% plus on margins. Wafer systems, and so you have the wafer packs and the Fox XP systems are actually higher than 60% margins as well. So to the point where when he was talking about margins, one of the analysts that cover AEHR is like, okay, so you guys are the only ones that really do wafer testing like this, and why are you not charging even higher margins? He's like, let's take the market first, and then we can look at, of course, raising the cost on some of these units, which makes a lot of sense because, frankly, when you can produce 20, but instead you're sending out 2 because that's where your customers are right now, you'd rather ramp that even if it's, margins of 60, 65%, and then later actually raise the price. But yeah, margin will not be a problem at all as long as there's volume, and we don't have to have max 20 units per month, which, I mean, frankly, that's not going to happen for at least a year. But yeah, they're going to be producing more and more, I think it's really good question.
Jose was in the chat. I just offered him an opportunity to join. If he's busy with his family, he can stay there. If you're going to pick your kid over us, that's, I'll let it slide this time, Jose.
I guess.
Yeah, I guess.
Okay, should I jump into some audience questions or do you have more questions, Tanner?
Well, I was going to jump into Jose's question, or well, not really question, but his comment, which I think brings up a question for me. If you could pull that up, Roy. 737.
It's 737. Okay. All right, here it is. AEHR Test Systems opportunity comes from an AI accelerated burn-in and future growth in HBM and optics testing. That's silicon photonics, which is in discussion. This is a
company
that was mainly, I was like, complaint company. Yeah, company makes sense. That was mainly EV dependent, but weakness hurt money. And that's where I initially even heard of these guys. I had not heard of them before last summer. And the transcript, which I follow on X, they'll just pull like interesting quotes out of earnings calls typically, or fireside chats, and post them. And oftentimes I'll usually miss those unless I see them on their feed. And they mentioned the mix shift on revenue from these guys that a couple of years ago, I think just a year and a half ago, 90% of their revenue came from silicon carbide, which mostly was related to what's happening as far as the green spaces, not just EVs. And now it's under 10%, I believe. And so there's been a huge mix shift, a lot of growth across the board. Some has been a little bit slower than others, but yeah, this is a very different company, very different space. If it wasn't for what's happening with AI, I'd be like, yeah, they're probably okay, but Teradyne would just be a better investment, honestly. It's very volatile.
The question
that's like the other thing you need to know. Like this is not an appropriate stock for every portfolio or every investor. If you love volatility like this guy down here, it is. But if you're a little bit more conservative, you hate seeing your stocks move up or down 10%, because it will on no news at all. Like today, it was up almost 10% at one point. No news, just a high beta stock.
Yeah.
Bouncing off of Jose's comment, though, their opportunity is the potential for a booming HBM or optics business, stuff like this. Micron is this unbelievable company, unbelievable margins, unbelievable growth rates, but the question is whether or not the cycle will continue. Do you think that AEHR Test Systems has the risk of the cycle continuing, but maybe not the upside that a Micron or SK Hynix or like, do you see what I'm saying? Like, if I wanted to bet on those industries, why don't I just bet on Micron and Light and Coherent and?
Yeah, I also invested in Micron recently too. So, I think SanDisk makes sense too. It's like both are being disrespected by the market. And the thing with them though is if you look at analyst expectations as far as revenue, a lot more analysts do cover both those names, especially SanDisk now that they've just really blown up. It looks not the revenue doesn't quite drop off a cliff, but it accelerates ridiculously. It's over 100% compound annual growth rate over the next 2 years for Micron and like 90 something percent for SanDisk, which is insane. It'll actually be higher for Air Test Systems just because you go from like very minuscule revenue to when you're talking about hundreds of millions of dollars over the next couple of years, that's a substantial increase. So I think that this, even from here, is likely to gain more than those plays. Although, like, why the overhang, I'm not sure. Now, one of those things, though, like they will benefit from this cycle, and whenever the cycle kind of, it won't like dry up instantly. It's not going to crash like what happened with green energy stuff. But the rate of increase of revenue production and so forth, and a lot of new people getting in, at some point that'll slow down. And
why won't
Micron has always been very cyclical. SanDisk, I'm not quite sure as much, but these guys have a lot of recurring revenue. So the more units that they have out there, the more that they can sell in terms of die packs and wafer packs with newer production lines, and also with the servicing revenue as well. So that recurring revenue will be higher than what their total revenue is right now within probably a year and a half, which is insane.
Wow.
And you said it won't fall off like the EV boom, but why would that not be the case if it's similar for HBM or something like this?
So they're positioned across a lot of different devices. So they're still in silicon carbide. This is basically a more diversified company, but a lot of the growth is from AI. So are you asking like for Air specifically, or AI in general not falling off?
Well,
no, I mean,
demand falls off, then Air is going to get hurt. Like I think that goes without saying.
Oh yeah.
No, that's what I'm saying. I'm saying, why wouldn't it be similar to the EV trade?
So the EV and green energy stuff, it was dependent on where we were at as far as regulation, where we were at with interest rates as well. AI, it doesn't care about that. Like it's off to the races. And at some point, like, I mean, you're an NVIDIA investor. I think you already know the answer, but like there will be a point when NVIDIA is not growing nearly as fast as it is. Maybe that's why it's trading, at 20 something forward PE, which is just stupid, given their growth. But that's not for a long time. And there's still a lot of recurring revenue. It's not going to be like, AI was just a bubble. It was a fad. We're done with it.
But this is our opinion now.
Yeah. Well, yeah. In some ways, it's like the mechanization wave, what happened in the 1920s, 30s, and 40s in the United States. But in other ways, it's also like the internet too, where when the internet was new, and you guys were like kids at that point, I was in college. I was in high school when it's very, very new, and you had to connect with modems and stuff. And then college finally. People were excited about the internet. They're like, hey, this can be incredible things. We had no idea how it was going to be used. Like, obviously some indication, but there's a lot of usages now for the internet that we would have never even dreamed of at the time. And the further we go along, the more that there is of that. AI is going to be the same way. That there's a whole lot. Like one of those things that Peter Thiel actually invested in this last week, and maybe we'll talk about this on Bootleg Tevis tomorrow, is the cow collars that are AI. And they're used to actually be able to not only detect where cows are and monitor their health, but also use sounds to direct them into a place that actually has better feeding. Like that's not something that we're like, oh yeah, AI came out. Cow GPT, that's totally happening.
Yeah. The dry run for when they put it on your phone.
So yeah. And no, Jake, I'm not saying that this stock is the next internet. I'm saying AI. AI is like the internet. It's not going to just drop off a cliff. There'll be times when it grows and what's happening in AI a lot faster. And this is one of those times. But it's not going to be like 5 years out, we're going to be like, AI was just a fad. It was an NFT.
Okay.
You're muted.
Let me ask some audience questions, and then we're going to go back to Tanner's questions.
You're still muted.
Go ahead. What do you want? Just
Can I unmute you? Let me
Oh,
unmute you.
you
Nope,
little
doesn't let me.
mic
unmute.
hog.
Oh my gosh, dude, this is crazy. I keep feeling like I'm like, why are you guys cutting me off? I'm talking. Stop. And I've been muted this whole time. I was just gonna say that can you help me understand? Because it's not like AI is taking off now, right? The
Mhm.
companies that are part of the supply chain have been benefiting. You see this in ASML, you see this in the optic names, you see this in the memory names, you see this like at every stop. Why has there been revenue? Why has the revenue been falling off? And well, the boom is happening today. Like the Blackwell ramp and
Or air,
HBM
yes.
and all this stuff is happening now.
Yeah.
Is that
So
like-
the simple reason for that is it's a long sell cycle. So you're not just going to be like, all right, great, I'm going to go ahead and buy 20 of these units. You need to validate and make sure that your product works, that they design the wafer pack or the die pack with the specification. It doesn't take like too long, but then you push that back to them and then they have to make a decision. And sometimes, they're like, well, we're considering a number of things and we're looking at this for a future product line. What you typically don't do, which also adds some length to the sell cycle, is switch how you're testing midstream in a production line. You don't, with rare exception. Instead, when that next generation of whatever it is you're making, or that slight minuscule change actually happens, that's when you actually look at changing what's happening. The other part is as far as the revenue. What happened with Liberation Day and the tariff. So they are of course, based in the United States, but they have a lot of international customers that ended up postponing or delaying orders. No longer an issue, but they retracted guidance like a lot of companies did in that time because they're like, hey, we've had customers that have said, hey, pause that order. We're not ready to do that. And so that impacted them, especially on the recurring side. But yeah, it's basically the revenue ramp is going to be starting the second half of this year. Probably a little bit under $100 million for the second half of the year, which again, like if we look at the total revenues, well, let's just
Is this because like Air Test Systems product is new?
No. It's because of a couple of things. So one is higher cost of failure, higher cost of systems as well. So the old way of doing things, especially with some of what's happening, what's being created, memory, for instance, like if you remember, I think it was last April or May, Jensen Huang was lambasting DRAM production and just saying, hey, we need more validated stacks. Whatever you guys have been doing, it's wrong. It's not been good enough. That's a paraphrase. It's a bad paraphrase. And they're like, if you look at their earnings calls, if you listen to them, throughput is one of those big issues. Like so in the Teradynes and in the Advantest, you might be able to test like 18 units at once. For these guys, since they're testing at the wafer level, not just the probes that are just checking to say, is it working now? Not if it will continue to work. These guys, again, are testing 18 wafers at a time, which hold hundreds or thousands of die cores, and they can test them for up to 24 hours. It could be minutes or hours or whatever, but the volume production that you're able to do on this and actually skip a couple of those other test steps if you wanted to is immense. So, but yeah, it's a long sell cycle that was partly disrupted by the Liberation Day stuff, but that overhang is gone. So second half of the year, between 80 to 100 million dollars is my expectations, based on the orders that we've seen, based on comments from the CEO, based on the bookings specifically. We'll have to see. But if we get that, let me just show this real quick again. This is annual revenue. So in one half of a year, they will have more revenue than they've ever had in any year, period.
Right, but that doesn't mean that the stock is not expecting that.
Oh,
Well,
yeah,
it's here today, dude.
Yeah. So
no, dude, but like I'm not at those are not questions. Like I'm saying that the stock is reflecting the growth that it's expecting, but is it still a buy today? That's
I think so. And that's one of the nice things about having Teradyne in the space. Again, they do very different types of automated testing equipment, but you can see the multiples where traditionally Teradyne has been trading in the past, and also like they're going through this whole rush as well. And so their revenues are accelerating some. Their stock price has really gone up nicely as well. And their multiples have increased. But even without that increase, like what's happening as far as air, it's not crazy to expect. I put a $70 price tag on this around the first of the year when it was trading at like $20.
Yeah.
We're here close to 40. And I at the time I had said, because we did the stock giveaway, and I gave some to Tevis, $100 worth. I was like, this is more of a second half of the year play, just because that's when the revenue is actually going to come. And I didn't know that a couple of order wins, which, I mean, they are not small deals at all, and the comments of the CEO about bookings, and then the bookings materializing over the next 2 earnings calls would be enough to drive the stock where it's at. So there is more speculation in the price. Not everything is price. And I think that, we're still pretty early in Air Test Systems. And this is not like a 1-year play either. I think over the next 3 to 4 years, the revenue is going to look so tremendously different. These guys are not going to be like the next Teradyne or Advantis. That's not where they're going for. They are niche in what they do, but it's not niche as far as it being meaningless. I think Gain had said, as far as the average amount spent on testing is about 5 or 6% versus like the entire cost of making whatever chips and other things that they do. That companies spend a lot of money on this because they need to get it right. And that number seems like it's only increasing over time, because when you have a unit that NVIDIA is making that's $42,000, you don't want to just be throwing those away left and right. Instead, if you're testing at the wafer level, then you could just throw away that one die core that's bad instead of all these things that are packaged together. You're going to save yourself a lot of money and a lot of time and headaches.
This is the other thing that bothers me about this system as well. Is I was just listening to Dylan Patel and all these guys, and they say the total cost of the chip for memory is increasing, for optics it's increasing, for the rack it's increasing. Like, we have to max out at 100. What is decreasing? Testing is increasing as a percentage of the total cost. How are they all increasing as a percentage? What is losing here?
So what is losing here as far
what
as
is losing the in total percent cost to manufacture the chip? I
don't know that answer. So yeah.
Because I keep harping on this, but I'm just not understanding, why are they winning deals now and they didn't win the deals in the last? Is it just their ability to produce?
Okay, so yeah, 2 things. So they can produce more now. The need is greater than ever, just because what's happening with AI. We've already talked about that. And then the acquisition of
but you would say, like, although the need is more now, they're not growing at the rate of the market.
Not yet. They will by the second half of this year, yes. Because it's a long sales cycle. So that's a nice thing about like the bookings, the comments on the bookings.
There's a ton of long sale. Like ASML has a long sale. Like why weren't you ready? Why weren't you getting ready 2 years ago for the ramp of Hopper, Blackwell? Like, this is not the first sale. Like, if it's the same product and they've been around for 45 years, why now?
Yeah, I wouldn't say it's the same product. Again, Sonoma is different than what they've had. They had Tahoe previously for package part. So it's a better product. It's one that this specific hyperscaler wanted. The other thing is kind of like what I mentioned as far as like the Googles, the Amazons, and Teslas of the world getting into this market, into this space. They brought in a lot of domain knowledge, but they were still trying to figure out what they were doing early on in the process, including with testing. And so oftentimes they went with like, okay, whatever you've used before, let's do that now because we need to get some out, but let's reevaluate this. They've reevaluated. Rarely do, unless there's an incredible need there, do customers want to be the first mover. Who was really the first mover to transition everything all the way upstream was On Semi. And they did so successfully at the wafer level burn-in. The CEO has mentioned that a number of times. And I think that might have been like the seminal moment for a lot of these other hyperscalers, where I shouldn't say other hyperscalers because that implies that On Semi is, but a lot of these other companies where they're like, okay, we thought it would go well. They tried it out. It went incredibly well. And they're actually taking market share now. We got to look into this. It just makes too much sense. But with some of the more established companies. So, if we're looking at, for instance, what's happening with memory, they're not over every single aspect of what's happening in memory. But like DRAM is one of those that they like to break into. They don't have a customer. on that yet. Flash memory, if we're looking at NAND as well, yes, they're there. But it's basically a triopoly of companies that have been around for a long time that are very innovative, they're very creative, but oftentimes they're like, hey, we've just been doing it this way as far as testing for the longest time. Well, now all of a sudden, really since last year, they realize what we're doing, the way we're testing is not good enough. We need to actually change this because the insane throughput, what's happening, and the higher cost of failure. So, yeah, it's a sell cycle that'll last, like typical sell cycle, I'm guessing at this is like 12 to 18 months. And we're at month 12 right now of this. So in essence, in the next 6 months, that's why you'll see a lot of revenue that increases.
Okay, we good to wrap? Everyone's got their questions answered. We're good to go.
I think that there's a lot of
Yeah, no, I'm just kidding. Tevis is.
So Tevis, help me out. Where to pull up?
Have you asked all your questions first, Princess? Can I get to mine, or
you don't even have any? You're grabbing the chats. It's my fucking show. I got a question to ask. You don't have any questions, so let me ask a question. You go to the chat.
I have like.
It's not their show. It's our show. I wanted to ask a question.
Oh, it's our show now. All right, Tanner. I thought you and Roy wanted a room.
I do, and I'm going to call him after.
He should. Okay, so somebody in the chat, Roy, said that there was a really strong concentration of their top customers for revenue.
Yes.
Just looking at Teradyne being 50 billion, I mean, it's not like comparable. I get that. And AEHR having a advantage on wafer testing, being $1 billion company. Like, what's stopping one of those big customers to say, you know what? We have this unparalleled demand. We're just going to buy you up, and you're only going to produce for us from now on.
Yeah, they should have, honestly.
That'd be great.
It would be Advantest or Teradyne, and it's very clear now. The valuation has increased, and I think gain, especially given like what looks like it's coming down the pipe, is not going to sell Air Test Systems for a cheap price. Like it's 1.12 billion or whatever. We might be looking at 3, 4, 5 billion. And if you look at Teradyne, if you look at Advantest, it's been a little while since I've done this, so I might get them backwards. But Advantest has done some larger, and by larger, it's usually the 1 to 2 billion size of acquisitions in the past at most. And Teradyne tends to not do those type of acquisitions at all of that size. I might have those backwards, but yeah, the size of acquisitions that these typically do are pretty minimal. Whichever the firm is, again, I might have them backwards, that has done acquisitions in the past. I believe it was a few earnings calls, or maybe it was a fireside chat ago. They were asked about acquisition. They're like, yeah, right now we're not in the market for this. Now, beyond those two guys, the reason why a Google or an NVIDIA wouldn't just say, hey, we're going to buy out these guys is, I mean, like, that's great for them. They have the units, they have the wafer packs, the die core, and the team. But ultimately, like, all those other customers, it's kind of like the same thing that would happen with SoFi with Galileo. You won't necessarily want to do business through one of your competitors that was like, we need more units. We're going to prioritize us instead of you. You don't want that. So I think an acquisition is pretty unlikely at this point, like probably below a 5% chance. I think if it was going to happen, it would have happened last year.
Is there any external risk? Somebody asked, if virtual burn-in becomes reliable, does it eliminate the need for AEHR entirely? In other words, will virtual burn-in make physical burn-in obsolete? Or maybe broaden that out to any macro risk in the technology advancing in such a way that the reliance on AEHR is reduced.
No, that's a good question, and I'd like to ask actually somebody that's an expert in this place. My understanding is virtual burn-in is just another layer that's being added into that testing flow, that it's not really capable of replacing actual physical burn-in. I could be wrong on that, but that's my understanding, is it's just another layer of what's happening.
How scalable, this is a question for me, how scalable is their recurring revenue? Like, on the machines, it's fairly easy to model out in terms of how much they can produce versus how much they sell it by. Like, that's very basic. But in terms of the recurring revenue segment, like, I know other companies have a similar model. Like we were talking, in one of the stock tanks about Palantir and their forward deployed engineers and, setting up the systems and whatnot. And that's the similar framing that I'm using here. How scalable is that?
Yeah. So here is let me make sure I'm on, okay, quarterly, which quarterly look even uglier. Let me do it on an annual basis. Such small numbers. All right, so this was air previously of this is the die packs and wafer packs. Tiny amount. This is annual revenue 2027. Once they got and they sold a lot of units for silicon carbide. Well, these don't just test one specific substrate, but they were sold with silicon carbide in mind. They sold a lot of wafer packs and also some die packs as well. And so we've seen that this has actually ramped tremendously in the last 12 months is less, in part because of what happened with Liberation Day and tariffs. I would expect somewhere between the 20 and 30 without anything like if this whole wave wasn't changing, like this is a pretty good base for recurring revenue, probably around 25 million. Services, you can see it just continues to be up and to the right. Very small numbers, but yeah, I was looking at this a couple of months ago too, Tevis, and it's hard to pin because we don't know how many systems that they sell. But let's say that they do sell, the 300 units of the Fox XP that's specifically for some of these wafer systems that are coming down, or even not that many. I am expecting that this will exceed their total revenue versus where it's at right now. And so even to the point like in the ultra bull scenario where there's mass adoption of what's happening at the wafer level, you're looking at much more than this. But I could easily see a 5 to 10x on the recurring revenue over the next 5 years, which is like that's the recurring revenue. That's not all of what's happening now. It's hard to say for sure because again, so service that's going to be pretty consistent and going up basically no matter what's happening in the macro. If something is happening in the AI space where for some reason there's a whole lot less chips that are being designed, and that the ramp is not only not increasing as fast, but is actually decreasing over time. That's when you see this kind of do what happened here, where it jumps up tremendously, then it kind of falls down and is a lull. But yeah, this is going to be meaningfully higher, and you can just kind of see it, like even with what happened with silicon carbide alone. And this is, oh yeah, I need to show that slide. Let me go back to. There's one other slide I need to show you because it kind of helps understand. I wish they had put numbers in this, and he made comments on the TAM size, but where the market is right now, my apologies for the quick, there we go. So they're in silicon photonics, the actual TAM, yeah, it's there, it's nice. Silicon carbide as well. This is what they were all excited about in 2023. That market has grown since 2023, but it's tiny compared to what's happening with AI processors as well. Gallium nitride, flash memory, DRAM as well. This one is more speculative. I would not buy air. If you're like, hey, these guys are going to win DRAM. This is like a free call option if it goes well. I'm not counting that. I don't even expect it necessarily. There's a lot of comments that were on the last earnings call by one of the analysts and back and forth with the CEO, which gives you a little more insight what's happening there. I would not count on it. It could happen. If it does, it's great. But yeah, this is just immense what's happening, both on the package part and wafer level. You can see the little icon right there. So,
you mentioned Liberation Day. Do they get any subsidies of any kind, like anything from CHIPS Act, or is there any possibility of that, like in the horizon?
I don't know. It's a good question. I'd have to go back and actually look. They've not commented on it at least in the last 2 years, and I don't recall anything. So I'm going to say no, but I could be wrong.
Yeah, I don't think they have any debt either, which is nice.
Yeah, no debt. Small amount of money. They do have an at the market offering that they are slowly dribbling. I think they took 10 million out last year just to help as they moved everything over into the one warehouse. And I think it's for $40 million. So it's not, I mean, it's a 1.1 billion market cap. So I'm sure that they took some. They should, especially when it went up to $45. Got a little ahead of itself, but yeah.
If you
One
had,
of the
go ahead.
I was just gonna say, what is the if you had to pick a thesis breaker, what makes you sell this company? And
Other than AI demand falling through the floor,
Okay.
like
That
let's
was going to be it. It's like if AI does what EV and green energy did, then absolutely.
no, like to me, the way I'm thinking about this is like, why would you pick air test systems over the security of a NVIDIA? There's so many different ways to play the AI trade. Why air test systems? And what's the risk of it
Yeah.
not working?
Yeah, it's super high beta. So, like I said, I think that we'll see $70 this year, which would be well past an all-time high. And over the next few years, which it's harder to like, we have you never know how a stock's going to trade. Like to back up real quick, Micron had like the insane earnings beat, insane numbers, and yet we're here trading at like $400. I'm like, okay, you never really can predict what's going to happen as far as the share price over the short term, but there is very clear line of sight and visibility as far as what's happening as far as a revenue increase. And this is just a super high beta name. So if NVIDIA, over the next 5 years does a 3x, which would be great, a massive, maybe it doesn't do that. Maybe it does a 2.5. Air is probably going to do more than a 10x. And I don't want to say the number because we may not get there, but it's just.
It sounds like they don't even have the ability to produce 10x.
Well, they do, yeah. Like their revenue is so small right now, Tanner. Like they had said that they can produce 20 wafer level or package part burn-in units per month. They're producing much smaller than that. So if they do hit production capacity of 20 per month, that's 240 at 4 to 5 million a pop. Plus you have the wafer packs, die packs, service revenue, and if they do the autoloaders as well. That's not going to happen overnight or all at once. And I don't know that they'll ever get to the point where over a full year that they're 100% booked all the time. The supply chain stuff, like it does happen, like Teradyne, and ASML and so forth. Like these companies that produce these massive units, it's very lumpy revenue. They usually have a backlog, and these guys do as well. That backlog will probably get longer, but what they're actually able to produce, even if it's just half of what Gain said, then it's such a meaningful amount of revenue compared to where they're at right now. Plus the reoccurring revenue that's later. And then like going like out further, like 5+ years at robotics, data centers, and space and so forth. That's not my investment thesis. I'm not invested for that reason. I'm just like, is this like a 5-year like incredible swing for me? Is it long term? I think it's probably long term. We'll just kind of have to see as time develops. But yeah, the better return, but there is higher risk too. And I think really that risk is probably just coming back to if Gain is just pumping the stock, like that's the biggest risk. That he's doing the same thing as he did in 2022 and 2023, getting people excited, getting the stock price up, and yet the demand doesn't actually materialize and it falls off a cliff. And maybe they're not able to produce the 20 units. Maybe it's 2. Well, I mean, that's actually, no, they produce more than that in a month. So, but let's say it's 5. It's still some upside, but it's not nearly as good.
I think that, that was going to be sort of my next question. Is like, well, if the demand is actually as robust as we think it is with regards to AI, like why aren't they immediately taking a page out of, all of these, like Nebius's book, for example, and just doing 300 million in capex or 500 million in capex, half of their market cap, and just 10xing their production over the next year and just going full on growth mode? And I think to answer my own question, like the biggest fear there is if the demand actually falls through the floor, you're screwed if you do that because it's a very risk on type of trade. So like any commentary there on the earnings call, or what's the thought process?
Yeah, so this is a 45-year business, and they don't want to just blow it up. But like the other thing is they don't need to. Well, let's say demand is insane and it goes well past the 20 per month. Then they would have to look at capex and hire a bunch of extra people, and it's just so they can increase production. They're not at that point yet. I mean, they're looking at maybe 3 units that are produced a month, die packs, contract level, all that sort of stuff. So they're not even close. I think when they start getting closer, and I don't think they'll be capped out in the second half, but if they have a number of other wins and they're talking to a lot of hyperscalers, which are somewhere in that sales pipeline. Gain actually does a good job every single quarter, and Fireside of kind of breaking things out and talking about where they're at. And some take longer than others to make decisions, but man, there's a lot coming down the pipeline, but they don't need to. They have plenty of production in-house to be able to meet the needs currently. But again, like if there's a customer that's out there that's like, we want to order 50 of these, great. They can get them, the second half of the year over a few months. Perfect. But if there's a second and then a third and then a fourth, hey, that's really exciting. That's a great problem to have. But at that point, they will need to do some CapEx. But the stock price will also be up a lot more as a result. So good problem to have.
Gotcha. Tanner, any questions from you? Just looking through the chat questions as well.
No, I still have, uncertainties, but I don't know if they're answerable.
I'm not sure if like, so I understand you've answered the question of like, okay, why wouldn't I just buy NVIDIA? Like, sure, you can. This thing has a high beta, so high risk, high return. I get that. In terms of what is the thesis breaker, it sounds as though it's like, well, the demand can fall through the floor. And I'm not sure if there is a scenario where AI keeps on chugging along, but because of there being a change in the testing process, air gets left behind, or they don't see that tailwind to the same degree. So I'm not sure. Like one of the audience questions was, are the machines absolutely needed for chip production? How often do they change out? And like, is there a possibility of this process changing with newer models?
Yeah, so that's actually what they're banking on, is moving the testing system further upstream for the wafer level burn-in. So not a lot of companies do that, and this is, I mean, it's their moat. Like there's very few others that even touch the wafer in the way that Air does. There's one kind of knockoff Chinese one, which is a long story I don't think we'll go into, but yeah, they're being sued, but it's, yeah, regardless. But yeah, that shift actually benefits Air. Now, that would maybe be not really a thesis breaker, but a thesis weakener, is if for some reason there is a technology that comes out that frankly it doesn't exist yet, that all of a sudden means that the reliability of all these things that are being produced, which is being improved all the time, but incrementally, not massively. But if there's some sort of technology that makes it so that the failure rate on some of these chipsets is like 0.0001% or like 1 in a million or something like that, yeah, that could disrupt the entire space. I'm skeptical of that ever happening, and the reason why is just like the complexity of how these units are designed, the size, the scale. It seems like the opposite would actually be true. But yeah, no, that is a possibility too. Like we're just talking about possibilities here, but I think that the baseline probability is AI continues to ramp and scale, that there's more and more people that are designing their own chips, that because of throughput, that they have to move things further upstream. Not everybody's going to move further upstream. Not everybody's going to choose Air. If they want wafer level, they will though. So lots of revenue scaling down the road. And a lot of it is durable just because of that recurring revenue nature.
I find it, and I could be wrong though. This is the problem, because I haven't heard the thing, but at first glance, companies in this space without supply constraints, and they're saying, hey, you know what, we're ready to build when we get orders, is like a red flag to me. Or at least that's how it sounds, of like, why aren't customers coming to Air?
Well,
sorry?
They do have a growing backlog, right? So that
the backlog, that'll be the most important figure that actually comes out, and what the CEO also talks about this as well, of what the not so much backlog, but well, let me just pull it up. Actually, it'll be easier to show you. It's not there yet, but it will be certainly, because there's been some design wins, though perhaps not all at once. We remove these two, and it's bookings specifically. Backlog is it's more bookings than backlog that you're looking at. So right here. So here are the total bookings. This is over the last 12 months. This is on an annual basis. And again, he's talking about 60 to 80 million of bookings by the end of May. So there won't be this quarter necessarily where you see all that. I think based on the design wins that we heard here, and especially if there's another one or two that are announced at the same time of earnings, maybe you see 50 million. And then you'll see the full 60 to 80 million, which will translate into revenue in the first half of their fiscal year, the second half of 2026 for us. But yeah, it's like going back to Tanner's question. It's a long supply sell cycle. It's not like they're like, hey, we can build plenty of this. They've not been able to build 20 for that long. They just moved everything into one warehouse, brought the teams together through that merger.
Yeah, I get that though, but like TSM is fully booked for fabs that haven't even broke ground. Like if the demand for this was so large, then customers would be asking every supplier. Like any manufacturer of HBM is fully booked. I
think a better corollary is to look at what's happening with the automated testing equipment and the actual backlog. What's
I know, but you don't have to play every part of the supply chain. If one is inferior to the supply constraints of HBM and DRAM and like play where the market is most constrained, where there's most pricing power,
Yeah.
And do I feel comfortable knowing that these are just my concerns? I'm not saying I'm right. I have not looked into this company. These are just my first. So everyone's saying like, Tanner, you're wrong. I might there's a 99% chance I'm wrong. But at first glance, I assume it's not founder run anymore because it's a 45-year-old company. This company's been around 11 years longer than NVIDIA. And I assume that they're going to come up with new products and CapEx and everything like this because in 45 years, they created $1 billion company. It's like, I don't know. And they only got to $1 billion as of a couple months ago. Like this was a 45-year-old $100 million company.
Yeah, I mean, like they did hit the billion valuation back in 2023 too. But yeah,
Right.
I hear what you're saying, and yeah, this is niche. It's not the next Teradyne. It's not the next Advantest. But what's happening in their space, like they are the market leader. The moat is very deep, and just from everything that's happening in space is leading towards people looking to move things further upstream just because they have to. So. I saw this question here too. When are you guys thinking this company becomes profitable? They've been profitable in the past. Maybe this quarter or the next quarter. That they're like right around. Yes, profitability, no profitability. Second half of the year, no question, highly profitable.
Yeah, that's some of the concerns that I've just been thinking about. And I like the fact that they don't have any debt, but
I love it.
I don't.
Yeah, there's not.
Yeah, but also they're not. I feel like they don't even want to take on any risk. Like they don't want. I don't even.
But like the fact that they don't look. Okay, so like I'm just extrapolating, right? But like the fact that a company would not want to take on risk, being a picks and shovels play during the gold rush, to me,
and like decently into the gold rush,
to me says like, all right, something is fishy here with regards to the actual demand. Like how big is that gold rush really?
Yeah,
I don't know.
Yeah,
I'm just
I wouldn't say that they took on no risk. Like the acquisition of Incal was not a small thing for them. I don't remember the size, but relative to their revenue, it was pretty substantial. But it was also kind of nice. Like there's obviously some risk. They've done acquisitions in the past too, but that an acquisition doesn't go well, or that the hyperscaler that said, hey, we'll buy from you if you get these guys, they're like, you know what, we actually changed our mind. That's not what happened though. So but yeah, they finalized the acquisition. I think 2 earnings calls ago they announced that. So off to the races.
If they had a disposable, $500 million, Roy, what do you think would be the place where they would put it? Just increasing production lines, or is there other synergistic acquisitions around the corner? Like what do you think here?
How much did you say? 5 million?
500 million.
500 million. Okay. That would be a lot of money for them.
It's crazy.
I would,
and it's like little monopoly money for like the companies that we invest in. I'm like 500 million. It's like half the market cap.
Yeah, 5 million. Be like, they'll just hold it. That's 500 million. They would likely hire a lot more people to, it's like sales agents basically to go and approach some of these vendors because a lot of their sales model, it's not all, my understanding, but is word of mouth and showing up to fireside chats and getting interest from, like you saw their customer base. That they're pretty well known, but they're not exactly like Salesforce out there just contacting customers and let me take you out to dinner and show you a PowerPoint, like whatever, So that certainly could be improved, and I wouldn't mind them seeing going in this direction. R&D line, Gain did talk about increasing that, especially because revenue will be increasing, and they want to stay ahead of others as well. The R&D budget compared to like the Teradyne and the Avantis is so small, but it's nice because they're playing in a niche that the other guys are really not going for, at least at this point. But yeah, they want to make sure that they maintain their lead there. And so I think that would be the other side of things. And then maybe they would look at building a factory, like if the demand was sufficient or they expected it to be like in Malaysia or someplace overseas, because a lot of their customers are in Southeast Asia, where they could have, of course, production here in the United States, but also production overseas, where it's maybe a little bit cheaper. They've not done that before. They may get to that point, but I think that they're basically, they'll wait until it's the right time. They're not just going to build for the sake of building and hope it works out. Like if we build it, then they'll come. They're going to wait till they actually have line of sight and like, oh, we need this in the next couple of years, and then they'll start building it accordingly. So,
can I ask a somewhat stupid question? Like, can you skip this testing that they provide? Because I found your answer to be really strange. I didn't think about sales being the place where they allocate that money, but if they have to go out and actively, do outbound sales to convince people to buy their product, it leads me to believe that this is an optional step in the process versus like, hey, you can't produce these chips without testing them first. Like, can you just skip this altogether?
Yeah, it's optional in the sense of like if you go in for a physical and you skip a bunch of the tests, it's optional, but you're gonna miss some stuff. If like so, right now there are others that do the package part burn-in. They're not the only ones. Although Incal was a really good acquisition and Sonoma's a great product line, better than Tahoe, frankly. But if you skip this completely, you're going to have either throughput issues on the front end, like what's happening with memory right now, just because you're testing like dozens of units at a time instead of tens of thousands of die cores, and you're able to test them significantly longer. And so when you do the burn-in test, you're running these with very high voltage with that bathtub curve, trying to get them, if they have issues, to hit that infant mortality and die. And then you just toss them out and you don't even package them with anything else. If you skip that step, fine. But then you've packaged it with other systems. And instead of, okay, let's break apart that system, you really can't do it. Some can be recycled, but for the most part, you're throwing out a much more expensive unit further down the line, or you're missing failure. Because instead, like the Avantis and the Teradyne mostly is just like, does it turn on now? Good. Well, that doesn't mean that, after using it for a month, that it just fails. And so, like this cost of failure, especially in the AI space, in silicon carbide and EV stuff too, to a lesser extent, is just continuing to get higher and higher. And so they have to catch these things. And there's a lot of different solutions out there. Air is one, but like the wafer level makes a lot of sense for a whole lot of companies. And I think it's a lot easier for them now with several different customers, including whoever this massive hyperscaler is, when they really ramp production over the next year or two, to be like, okay, yeah, this works. It's very clear, and there'll be a lot of people that follow. Like it's not exactly this way in the space, but there's a few market leaders that are like doing cutting edge stuff with silicon photonics. They're doing just insane stuff with, even like experimenting with quantum, and just the chip design is just going through the roof. And then there's a whole bunch of companies that are like, yeah, we don't want to be cutting edge so much. We just want to follow what all the other people are doing. So it only takes like a couple of people, and onsemi is one of those that was very successful, shifting to the wafer level, having incredibly good success, saving a lot of money, having much more reliable product, and actually taking a lot of market share. And others that are in the space are like, Well, that could be us too. Why not?
Yeah.
But it takes time.
No, this is interesting. I kind of agree with George's comment. Like they solve a problem that only a few think is a problem. And while the space is growing, I get that. And the failure rate is getting more expensive. I would also agree with the second part. Design is getting better with AI, designing AI. So the need, or like the perceived need for testing from these companies might be falling as a result of the processes improving. I don't know that that's the
Yeah.
case.
There,
It's not.
I think there's definitely
Yeah.
going to be a boom in revenue. Like, I mean, I'm not going to. I'm sure the analysts have done their work. It does. You don't just have to trust Roy here. It is going to boom. Also, why is our names missing?
It's
Not
Shift
sure.
N.
Maybe it's a setting.
Shift N.
Shift in.
Shift. What is it?
Don't play around with hotkeys. You're just gonna like quit the entire browser.
It's Alt F4. It's no, don't do that.
It's actually
Done.
Command Q.
Oh wait.
I thought it was Shift N.
Right, we're wrapping it. It doesn't like we don't need names for the last 3 minutes of the show. Yeah, how are we supposed to know who is who?
In June was actually an error well before I was in the single digits. So they're not being too hard on me. That's the whole thing about Stock Tank, which we've done. I've never pitched before, but anytime we have someone on, no matter how much we like them, we want to ask hard questions just to be able to test the case. And I don't always have the answers, and some of my answers might be wrong, but no, I think that they're very fair questions.
You haven't pitched on Stock Tank yet?
Nope, this is the first.
That's crazy. That's wild.
Crazy.
I should have done Palantir back in the day, but I think I already did that. So
you still have like 2 other stocks to pitch after this one.
Yeah.
I need to do Figure for sure. That one is like you may not looking at it be like, oh yeah, it's not that complicated. No, dude, it's like so complicated. It's the complexity is significantly higher than AEHR. Like, and I've been following AEHR since last June or last July, so it's been a while now, 9 months. Figure I've been tracking since their IPO, and I'm still like, there's still parts of it that I'm like, okay, but what is this again? Like, why are they doing this? What are they going for? What's the play here? It is complicated. VG is probably like, I'm going to see, I think what we should see is if Matt Money would be willing or able to come on, and then like maybe him pitching it, and I can add on a few things as an investor. But I mean, I could pitch it, but that's the nice thing about VG is I'll say it's a very simple to understand space and opportunity for VG. It's not really that complex. It's very clear, which I think any company that you're investing in, there is a like Eli 5 type of bull thesis that you can do for any of them. If you can't, then you've not done enough DD. But even like the very detailed bull case of what's happening with VG is not really that hard.
Roy, elevator doors closing. Any last comments on AEHR that you want to leave the people with?
Yeah, I mean, like I think it's an opportunity still here for the long term. There is more risk, at 37, 38 than there was when it was when I was first buying it at like 12 or 13. But yeah, this is a long-term play for me. It's very volatile, so make sure you're comfortable with volatility. The market, as we enter earnings in early April, I'd have to look up the date again. It tends to sell off AEHR. It doesn't always on earnings. And last quarter, Gain talked about the bookings and what was happening, and the stock fell because of the revenue miss, EPS miss, algorithms doing the algorithm thing. It fell like 20 something bucks, like 21. And I'm like, okay, I never do margin. I don't touch it other than the $3,000 for Robinhood. I took on margin at that point to buy AEHR because I'm like, okay, I don't know when they catch what's actually happening here, but this is incredibly bullish, and we've only had confirmation since then. So what I'm saying is, like, I wouldn't go all in necessarily here, even though I think that there is material upside, especially with what's happening in Hormuz. Even though it doesn't really impact AEHR directly at all, it's going to be very volatile. So you can do your own due diligence, check out and make sure that my answers are right. Listen to like the Needham presentation if you're just going to listen to one thing from the CEO to kind of get an understanding. Do your homework, figure out what price is good for you, and you may not be comfortable with this. Like, microcaps are not appropriate for everybody. Tevis should probably be all microcap, but he's the only person out there because he's Mr. DGen. But yeah, make sure that you understand what you hold, because you will have a 10, 15% down day on air. If you haven't done your due diligence, you might say, you know what, I don't get this. I don't want to lose any more money. I'm out. Be careful.
Have you pitched a show, Tevis?
I've pitched a couple of shows. Tanner, what's your take on your SoFi Sloth is asking?
I don't have one.
Are you buying or not?
No.
No?
It goes in the way too hard bucket for me.
Yeah.
I can see that.
Like, I worry about, 3D DRAM or something like this, like destroying the memory space. And now you bring up some comment about virtual testing and all this stuff. And I'm like, who knows? And that's without sales today. So I don't know. There is a potential for a 10x, but there's a potential for no business. So
yeah, I mean, there isn't really a potential for no business, but there is a potential for not much increase, is what I would say. And for the price that Air is trading at, that would be problematic. Like we would see, maybe $15 a share at that point. So that wouldn't be ideal. But yeah, I think that's unlikely. I think it has actually a chance of a higher upside than what you indicated as well. But it'll take time to play out.
What?
It's interesting to me because it seems as though these next 2 quarters are really gonna largely tell the story. And if these next 2 quarters go the way that Roy is thinking, this thing will have an easy double baked into it from here. But if it doesn't, then you can go back down to 20 on these next 2 quarters. Like if the demand doesn't seem as strong, and if the cyclicality is back, or whatever the case may be, or if they don't scale as fast, let's say. So you're kind of at a knife's edge, it seems like, with this trade. I don't know, Roy, if that would be a good categorization.
Yeah, I mean, like I've always said since the very beginning, I was like, this is probably a second half of the year play. I would have expected, but we've seen actually more happening in this first half, which has helped the stock price. And like in the current macro, if you told me like the AI trade is deteriorating as far as multiples, I would have expected that for this. But really, that's not happening for Air, and also a lot of other people that are in the automated testing equipment side and that are in the AI supply chain. That's been a great trade, actually. Full disclosure, I've not sold any at all other than covered calls. I did into earnings sell one covered call, just one, at $50 a share. I'll probably sell some 60s and 70s. I wouldn't mind exiting. Like if we get a big bump, Air is again close to being my number one position as a microcap. That's insane. It's 3% of my portfolio now because it's gone up so much. And I'm going to take gains along the way. I'm not going to wait for $70 a share or the 10x or whatever. It'd be nice, but like Tanner said, there is risk. Nothing is certain out there. And even if they absolutely kill it in revenue, they could get a Micron treatment that just like, oh, you're going to grow 100% revenue over the next 2 years. We'll give you a 6 forward PE. Not likely, but it can happen.
I really have to go, but I want to make sure that we stay consistent with the Stock Tank show. Can I ask the chats, what stock do you guys want to see from us? Maybe we can try to see some consensus. If not, you can actually throw up a poll, Roy, on the widgets thing. If you see that, that'll go across all channels.
Widgets. Yeah, I'm not.
Credo's an interesting one. We should find somebody for that.
This guy said figure and VG, so
yeah, put them in the thing.
Okay, let me notes, style, media, assets, banners. Where am I looking?
Widgets.
Where is this 2021 Zinc? Beyond Meat, he says.
Maybe you don't have the. I don't know how you wouldn't have the update, but
we can do a Twitter poll.
Yeah, we'll do it later. We'll do it later.
Yeah.
But yeah, VG, Micron seems interesting. Circle seems interesting. Figure seems interesting. There's a bunch of them. So we'll poll and see what to do next. Along with, if you have any other suggestions you want to tag us in, if you could include a potential specialist, and that could be yourself. But let us know who you would like to pitch that stock.
Yeah, UiPath is another one I hear a lot about. I looked at them in 2023, but I'm not kept up, so that'd be interesting.
Yeah, maybe I can get Stock Talk on.
Shopify, dude.
Yeah, but no one, like, I would like to, but no one will end up like do a poll. They won't do it. No one cares about that company. It drives me nuts.
Yeah.
It's like Figure. I imagine that Figure will be cool, but I don't imagine that anyone's going to vote for it.
Yeah. It's one that I'll pitch at some point to you guys anyway, once I get it figured out a little more, pun intended. But
okay, let's
all right. Thank you guys for tuning in. And as always, do your own due diligence. But Tanner, Tevis, this has been fun. We'll do it again sometime.
peace.
Thanks, everybody.